I'm here representing Advanced Merchant Payments, and we're the bank's alternative to alternative lenders. As was just mentioned, we're headquartered here in Hong Kong. We've got operations here, Singapore, the Philippines, and the United Kingdom, and we have expansion plans across the region. Okay, but what actually do we do? Firstly, I need to get this clicker working, which is not working. So I'll just go without the clicker, I guess, which is not ideal. So what exactly do we do? Well, we enable banks to profitably offer short-term unsecured loans to underserved small business customers. Can someone fix this? So what exactly, what is the problem that we look to address? Well, basically, there are a huge swathe of small businesses that are creditworthy, that have bank account, that they are bank customers, that is, they're small business account holders, but they cannot access traditional bank financing through the current bank products. Now, from a bank's perspective, traditional loan origination and servicing processes are simply not cost effective for loans of a certain size, that is less than 100,000 US, loans of a certain duration, typically less than a year, or loans to customers of a certain risk or perceived risk profile. So think businesses with no collateral, businesses that have not been in operation for more than 3 years, perhaps they don't demonstrate profitability, thank you. Perhaps the owner or guarantor has a poor personal credit score, and so on and so forth. In any event, the net effect is the same. There's an MSME credit gap. So that is a micro, small, medium-sized enterprise credit gap, and the effect of which is really well recognized on small businesses, thank you, on small businesses and the wider economy more generally. But really our question is, what is the impact on banks? So hoping this works, awesome. So traditionally, these underserved small businesses have turned to informal lenders. Now, increasingly in markets such as the US and UK, even these lenders are being replaced by formal, technology-driven, well-funded alternative lenders. Now, the net effect for the bank is the same. Lost wallet share of existing account holders, reduced customer loyalty, and indeed, ultimately, the risk of disintermediation. Now, it's our contention that banks retain significant competitive advantages in this market, not least of which is cost of capital, but also they've got a reputational advantage, they've got a regulatory advantage, and they've an informational advantage. That is, they have information passing through their systems that pertain to those small business customers. So what's the opportunity as we see it? Well, in short, the opportunity is for banks to deploy alternative lending technologies and methodologies for the direct benefit of their small business account holders, and indeed the bottom line, by availing of AMP's loan origination and portfolio management solution. So what exactly does that solution comprise of? 3 pillars. Automated loan origination based on electronically verifiable cash flow. That is information that is already passing through the bank systems, as well as myriad other data points. Daily portfolio management. That is daily payment collection, daily reversal handling, daily reconciliation, daily monitoring, daily risk analytics. All of which is predicated on continuous risk analytics, effectively enabling us to manage by exception on a 24-hour cycle. What is the solution or the proposition for banks? Well, it's a white label processing solution, either end-to-end or modules, components thereof. There's an ease and speed of implementation. We leverage the existing bank infrastructure so as to minimize cost or development effort on behalf of the banks. We do all the work. And ultimately, the bank is always in control. The bank is in control of the funds, the bank is in control of the underwriting criteria, and the bank is in control of the customer relationship. So the benefits are, as you might expect, profitable product to fill a recognized market gap, increased wallet share of existing account holders, and indeed customer retention acquisition. And this is not even to describe the benefits, obviously, for the end customer and the wider economy more generally. So there are political, reputational advantages to the bank as well. So that's us. What about the FinTech Innovation Lab? How have we, as a growth stage company, benefited from our participation within the program? 3 things. Recognition and validation. Simply being selected as one of the 8 finalists, we think, has provided a certain recognition and validation, not only to our mission, but our ability to accomplish it. 4 years ago, most people didn't know what alternative lending was. At that time, we were deploying our own capital as proof of concepts in 3 markets successfully. Indeed, recently, we were recognized by Swift as a growth stage innovator in this area. Secondly, sales acceleration. The lab has provided fast-track access to decision makers and key financial institutions, on our part, retail banks, And the feedback has been extremely positive, so much so that we anticipate progressing to commercial relationships in the coming months. Finally, investment and scaling. Certainly exposure from the lab has doubtless contributed to our recent Series A institutional round of funding. Just 2 weeks ago, we announced that we had secured $5 million from SBT Venture Capital. SBT Venture Capital, of course, being a bank-backed FinTech fund. And that investment has perfectly positioned us to execute against our strategy in 2015 and beyond. So from A&P's perspective, it's onwards and upwards from here. Thank you for your time and attention. I look forward to speaking to you later.